Hello and welcome to July Investor Check-in. I'm Pacome, Director of Investment Risk at Nutmeg. In this month's update, I'm going to be discussing the second quarter earnings season, what it tells us about the outlook for markets, recent development in trade relationship with China, and finally, provide an update on Brexit negotiations. Under usual circumstances, earnings season is an important time for investors who rely on analyst review of companies' earnings, the value of the business, and the outlook. The Q2 earnings season this year is the first time that companies are going to report the impact of COVID-19 and the lockdown measures. It is particularly important to look at those businesses, in particular the tech, online commerces, etc., the ones that expect to fare better than others in this environment. Investors will have specific review of the margin level expectation. As can be seen on the chart, the increase in margin multiple is believed to have contributed to around half of the equity total return over the last 25 years. US corporate margin will be on average, though, severely impacted by the virus and seen to go down from a recent record high of more than 12% to numbers around 9.5%, which is a significant decrease. If we go more specifically in the timing, in the first week, we saw earnings from some of the big banks, which showed us some relatively mixed results. Trading results were pretty good, in particular in the large US banks like JP Morgan and Goldman Sachs, where they showed really large increase in profitability of their trading business. But this was offset as well by slower activity somewhere else, and increased level of provision for future corporate default. We also saw the earnings from Netflix, the big tech company, one of the business that is expected to do well from the lockdown, and unfortunately missed the earning expectation. In fairness, they warned in April that growth was expected to slow, but investors were looking to get pleasantly surprised, which actually didn't really happen. So the stock is currently the 70th biggest market cap in the US, so not meaningless. Looking at the calendar, many results, especially for the tech companies, will be published around month's end, with Google, Facebook, and Amazon all reporting during this period. We will have as well some other important companies like Caterpillar, Exxon, and in the UK, BP, being some bellwether for how they have done during the COVID period and what will be their forward guidance. Renewed tension with China, which really started with the increase of the COVID-19 pandemic, and it has increased lately. On the 15th of July, the US president signed a legislation to allow his administration to impose sanctions on Chinese officials in retaliation of the Chinese government security law. As an example, the New York Times has decided this week to move all its digital hub from Hong Kong to Korea, which has been so far the first major relocation by an international news organization, but might be followed by many. We are seeing as well increased level of tension between the UK, Europe, and China. The UK finally banned Huawei, the Chinese conglomerate, to participate to its future 5G network, and has recently suspending its extradition treaty with Hong Kong, a move that wasn't really well appreciated in China. So far, markets haven't reacted to this news flow, but if we were to see increased level of tension, and in particular around the technology industry complex, from Apple's sales in China to the usage of TikTok in the US and somewhere else, this could have further ramifications. The biggest news was the official deadline for the UK to ask for an extension, which was the 30th of June, and this deadline has been passed. So it seems now almost certain that the UK will effectively leave the EU on the 31st of December, deal or no deal. And there were a few other as well soft deadlines at the same time, one around fishing and one around financial services to complete the equivalence assessment, which were on the same date, and no deal was reached as well on those points. So on our side, we don't expect a lot will be achieved in the coming weeks, and likely to see only sporadic news distilled to the press, good or bad, depending a bit on the progress of the day. But ultimately, and it is really what matters, it seems unlikely that a full and comprehensive deal will be achieved. And this has been somehow reflected in the pound lately, and especially versus the euro. The main question is whether some sort of a deal acceptable by both sides and avoiding a radical rupture will be reached, or whether no deal will be achieved, bringing us back to more or less the middle of last year. So we will only know with more certainty by the end of October or November, to our opinion, what will become the most likely scenario. And we will see up to then some up and down depending on the daily news flow. Well, thank you for joining us this month. As always, if you have any questions for myself or the rest of the investment team, then please contact us anytime via email, social media, or leave them in the comment section below. We look forward to see you again next month.